US markets strengthen ahead of Nvidia results. UK inflation appears to have peaked. Australian wage growth behaves and shouldn't stop the RBA from a final cut. And Indonesia holds rates to support its currency. That's coming up in our 5 Things in 5 Minutes on Thursday, November the 20th. And then in our deep dive interview, ANZ Senior Commodities Strategist Daniel Hynes surveys the outlook for the aluminium market.
They say aluminium is like a solid form of electricity, so certainly the issues we're seeing in electricity grids across the world don't bode well for the aluminium market.
But first in 5 and 5 with ANZ, US stocks rose ahead of a key earnings report from Nvidia amid general concerns over AI valuations. Meanwhile, in the UK, there was some good news on the inflation front, with the headline CPI falling for the first time in 7 months by 0.2 points to 3.6% annually. ANZ economist Henry Russell says inflation appears to have peaked.
Further easing across both the core and services measures also points to an underlying disinflation trend and reinforces our view that the Bank of England will cut its policy rate at the next meeting in December. The market now sees a high chance of that happening as well, with nearly 90% chance of a cut priced in.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was up 0.4% and the Nasdaq up 0.6%. The yield on the US 10-year Treasury was down 1.6 basis points at 4.106%. West Texas oil futures down 2.8% at $58.96 US a barrel. Gold rose 0.2% to $4,074 US an ounce. The US dollar index rose 0.5%. The Aussie dollar down 0.6% at 64.67 US cents. And the Kiwi was down 1% at 56.02 US cents. Number 2, Australia's wage price index lifted 0.8% in the third quarter and 3.4% over the year, in line with expectations. ANZ economist Sophia Angala says public sector wages led the way.
Public sector wage growth exceeded private sector wage growth for the third consecutive quarter, and the ABS attributed that strength partly to state government contributions in the quarter. State government pay rises are contributed 0.84 percentage points to public sector wage growth.
Number 3, Sophia says the data doesn't change the picture for the Reserve Bank of Australia.
The wage price index lifted 3.4% year on year in Q3, and that's consistent with what the RBA is expecting for Q4 wages growth. They expect that to come in at 3.4% year on year as well. So given that, we continue to expect that the RBA will deliver a final 25 basis point rate cut in the first half of next year, likely in February.
Number 4, Bank Indonesia held its benchmark rate at 4.75% as expected yesterday to support its currency. ANZ economist Crystal Tan says the central bank did maintain an easing bias though.
The central bank's tone has turned a little bit more cautious than October's explicit intent to utilize the room for lower rates. So overall, we are still keeping our forecast for 2 additional 25 basis point rate cuts in the current easing cycle. So that would take the policy rate to 4.25%, likely by the first quarter next year. However, a rate cut at Bank Indonesia's next meeting would likely hinge on the Fed delivering one at its December meeting.
Number 5, Malaysia's exports jumped over 15% in October from a year ago. That was above expectations. ANZ economist Arindam Chakraborty says the trade surplus eased slightly from $4.8 billion US in September to $4.5 billion US.
Within exports, the increase was mainly driven by a 22% rise in electronics, which accounts for over 40% of total shipments. Non-electronics exports grew at a more modest pace of 6.4% year-on-year. On the other hand, the increase in imports was mainly driven by a 55% jump in capital goods imports, signaling robust investment activity. Conversely, intermediate goods imports declined 6%, suggesting a potential slowdown in manufacturing demand.
Arindam Chakraborty there. Now, in our deep dive interview, ANZ Senior Commodities Strategist Daniel Hynes analyses the pressures faced by the global aluminium market, still affected by a policy change in China nearly a decade ago.
About 7-8 years ago, China implemented, this cap on aluminium smelting capacity, set at 45 million tonnes. Driven by overcapacity sort of issues that they've been producing, a lot more than they consume for some time and have been, large exporters as a consequence. But it had weakened sort of profitability in the industry. So they were looking to rectify that. Obviously, environmental concerns were a big issue as well. They've been looking to reduce the emissions from heavy industry, such as aluminium smelting. And so, this has been in place for some years, but we're actually now coming up to the point where production is hitting that limit. And under the rules of this policy, they can only bring in new capacity if they shut down some old, inefficient sort of smelters. So it does ultimately mean that we're past the days where we see double-digit growth in Chinese aluminium output, and that has big implications for the market. They've been obviously the biggest producer, export to the international market, and do sort of act as a swing producer. They pull back when the market's oversupplied and prices are weak, but obviously come and fill the void when demand does pick up as well. So that market sort of balancing act is a little bit curbed as a result of the Chinese market now looking at a period now of a very flat output.
Tell us a bit more about what's happening with Indonesia and Chinese investors in Indonesia. They can't expand in China much anymore, but they could do it somewhere else.
Yeah, well, I mean, that was where a lot of the aluminium companies in China turned their focus to after the restrictions on new capacity came into place, and certainly Indonesia represented a market which they're familiar with. A lot of Chinese investment has gone into the nickel industry there, and the country does have available resources of bauxite, the raw material to make aluminium. So it was a natural sort of fit, and they've clearly thrown some money at building out their capacity in that country. But, there are sort of hurdles which will potentially curtail the growth there. We certainly don't or it doesn't have, I suppose, the resource base that nickel did. So I think the growth rates will be significantly less. And Indonesia has its own energy issues as well. It's highly dependent on coal-fired power, electricity. During the recent sort of build-up of the nickel smelting industry, they've had periods where they've had to constrain investment there because of the demands on energy in that country. So, adding to that, a build-out in aluminium smelting would exacerbate that even further. So, it's no sort of given that that amount of investment they're looking to put into the Indonesian aluminium industry will actually come to fruition. So, even growth outside of China, isn't assured, and obviously means that potentially looking at a fairly tight aluminium market in the medium term.
I suppose that growth of electrification has helped demand for aluminium and also has increased demand for electricity. How is this all playing together into your outlook for the aluminium price?
Yeah, well, they say aluminium is like a solid form of electricity. So certainly the issues we're seeing in electricity grids across the world, don't bode well for the aluminium market. So, our forecast now, suggests that the market's going to be pretty tight. We've seen obviously a good run in the price this year already, up about 20% but next year it looks like an even larger deficit forming as a result of these constraints on supply amidst that fairly supportive sort of backdrop for demand. Means we could see even higher prices over the next 12 months or so.
Daniel Hynes there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Thursday, November the 20th. Catch you tomorrow with the implications of key lending rate decisions in China. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.